give you an idea that the volatility has just dropped and prices are trading in a narrow range. I can also see by the drop in I can also see the drop in volatility by the number of blue candles. Look at those. Look at that steady stream of blue candles. Neutral blue grab candles. I've got a flattening 34 EMA wave. I've got 0 initial trend bars. So everything here is telling me that prices are becoming a coiled spring. Everything here is indicating that I'm dealing with a potential momentum environment, which means I'm going to be waiting on a breakout or breakdown. Now, what essentially happened? This is where that update, by the way, basically left off, where that red line is. So that basically shows you where that triangle pattern had formed and where I had captured that image for that update. And then you can see what's happened subsequently. We went from the blue grab candles we started plotting red as we began to close below the 34 period EMA. The sentiment got bearish. The momentum got bearish. We broke down through that chart pattern's uptrend line support, that triangle uptrend line support. We've been trickling down ever since. Okay? Now notice as the initial trend here has started to increase. Why? Because we went from what was then, you remember, there was 0 initial trend bars. The wave was flat. Now it's happening. The wave is actually starting to take more of a 4 to 6 o'clock angle. The initial trend is increasing to reflect more volatility, maybe even the early stages of what could become a downtrend, but we're not quite really there yet on the initial trend. The 34 EMA waves trying to take on that 4 to 6 o'clock angle, but it's kind of shallow. But we're in transition here. We've gone from neutral to definitely more of a bearish sentiment. So that was the triangle breakdown. Now, if I want to take another step, what would be a way to manage this trade? Obviously, I've got psychological levels. I could put in Fibonacci levels in here to project downside support through a Fibonacci retracement or an extension. I can also use my price range movement. Okay, that's another thing I could utilize here. The price range movement overlaid on the chart. Okay, so that's the way I could put some of these tools, which are automated, together. Now realize another thing, I do separate my emerging patterns and my completed patterns. That's why I have 2 different plugins running on those charts, because I could look at the 30-minute chart of the Euro US dollar here, exact same time frame, exact same pair. Let me tile these vertically here. And what you'll notice is I've got 2 different sets of patterns. And the reason for that being that these are emerging patterns, patterns that for the most part have not yet broken, versus completed patterns, those patterns that have been already broken. Okay? So I like to keep them both up in this view, so I know the difference between patterns that I can be a little bit more proactive about, meaning the emerging, and patterns that are going to give me a little bit more insight into what's already been broken and potentially where prices could travel up to or down to in terms of that forecast area, and that would be through the complete. Okay? Now, I know that the Euro US dollar is taking on a little bit more of a downtrend. That's where the momentum's heading. So, if I want to look for a pattern that may not yet have broken out of a pattern, or broken down, broken higher, let's take a look at the dollar yen here. Okay, let's go to the directional bias, daily chart. What's happening on the dollar yen? Well, we did break 80. We're struggling to find any kind of selling momentum to really push us down through 79, but certainly more bearish. You can see here that most recently we had a bear flag, upward angling flag, break down through support. Really great example of a near-term pattern that signaled that move lower as we slice through 80, the decade level. Okay, and we definitely have slightly more bearish, well, not slightly, we definitely have bearish sentiment and momentum, and a slightly more angled, down-angled 34 EMA wave, which could be indicating sometime soon that we're going to really transition into a downtrend. We'll see. 79 is really what's going to hold up this, and we'll see if the sellers can continue the momentum through that level. But up until now, we've continued to congest. So is this my best time frame for a trade? Likely not. So I can go look for some patterns that are emerging intraday. And if you take a look at the 30-minute chart, you'll see that we've been flattening out, moving sideways on this time frame. Okay, the wave's trying to flatten out. We're looking at a steady stream of blue to green to red to blue, so we're definitely kind of indecisive about where prices are moving next. Notice the difference between this chart and the Euro US dollar 30-minute chart where we had a steady stream of blue, really showing that neutral coil spring. We're dealing with a little bit more volatility here because we can't go steady neutral on this time frame quite yet. See that? Just the grab candles are indicating that. But I think we're flatter. We definitely have a lower volatility, not as low as that 30-minute Euro US dollar, but it's definitely lower. I can see that in the price range. I can see that in the more or less flat wave, and I can see that in what is, and let me move this window here so you can see it a little bit better. I can see that in the very low initial trend reading. Okay. Now, is there a time frame where I might see even a flatter 34 EMA wave? Well, I'm not quite seeing it on the 15-minute chart. Okay, I've got the same kind of issue there. Steady stream of blue, red, green, so a little bit more volatility, not quite as flat. And the initial trend is definitely higher. 5 bar actually reflects more of a distribution market. In other words, volatility, exhaustion is expected. How about the 60-minute chart? Okay, the 60 is actually flattening out a little bit better. Notice how I still have the red, green, and blue, but there's more blue dominating the consolidation, congestion, this sideways market. Is it consolidation or is it congestion? What will be the determining factor? How much blue I see, how much blue in terms of the grab candles. And by the way, for those of you that like traditional candlesticks, you can still get the best of traditional candlesticks here. I differentiate up and down closes by using light and dark shades of the blue, red, and green. So you can still get that classic candlestick interpretation on top of the momentum and the sentiment indicator. All right. So in terms of the blue here, we're definitely flattening out. The wave's flat. I've got more blue. Okay, more so than that 30 or 50-minute chart. And how do we determine this, by the way, gang? It's all a comparative process, isn't it? Don't look for the textbook example. It's all comparison. That's why I call this triage. Okay, we're sorting through, we're prioritizing, we're looking for the differences between the different time frames. And notice also the initial trend. Okay, I believe this initial trend is probably fairly reflective still of this downtrend. The reason I say that is you can see how this downtrend in terms of the recent price movement was a significant one. I think it's still somewhat reflective of that, okay? But I can definitely see we flattened out, and that's where the blue grab candles help confirm what I'm seeing a little bit more objectively. Okay? So triangle pattern recognized by the auto chartist, and what am I going to wait for? Breakout or breakdown. How am I going to confirm the price movement? You can utilize a traditional MACD based upon the signal line using a histogram, and if you have the traditional MACD, you can use that. If not, the moving average of the oscillator will give you that as well. And here it is, slightly above the zero line, indicating a little bit more bullishness. Okay, so if we break up higher, that is the direction I will take a momentum trade. All right. Okay, so in terms of the view that I'm looking at here, the kind of candles that I'm focusing in on. So you can see through a number of indicators, a number of views, I can get a good idea of what the overall market's up to in terms of directional bias, and then go kind of focus in intraday and get a better idea of where my opportunities are, where my trade management is, and again, scan the charts with that in mind. So the Euro US dollar is already broken out of that consolidation, so I can wait to see if that dollar yen 60-minute, in this case, we'll do the same. And then once I do that, once it does break out, of course, remember, triangles are self-limiting patterns. They will eventually simply break for lack of anywhere else to go. What can I then do? I can head over to the 1 hour chart and take a look at the expected price movement ranges overlaid right on top of my MT4. And boom, I can get an idea of where there could be projected, forecasted support and resistance over the next 15, 30, 60 minutes. Okay? Very handy to have automated right on your screen. And I can do that after the breakout. Actually, I can look at it now and perhaps even confirm my breakout by using some of these projections. All right, so that is our session for this morning. Thank you as always. I hope you can kind of see the progression of a trade setup using these particular tools, going across multiple time frames and selecting the time frame that I think is offering the best psychological clarity of the market, as well as potentially the best trading setup. I'm Raghee Horner. Thank you as always for joining me, and I'll see you in our next session.